Good morning. My name's Ben Arnott. I'm here as your host and moderator today for the webcast that we've got planned, the title of which is Financial Aid for Energy Transition Post-COVID-19. The question that we are asking ourselves today is, will the energy transition remain a priority for banks and financial institutions in the aftermath of COVID-19? This event is jointly presented by the British Chamber Singapore's Energy and Utilities Committee and also by the Financial and FinTech Committee. Before I commence discussion, I'd just like to say thanks to a couple of my fellow committee members who've really helped to get this event ready for today. Tim Rockwell, who's the chairman of our Energy and Utilities Group, Allard Noy from Infraco Asia, who's been my kind of right-hand person and joint collaborator in this event, and also to Sabina Nair, who's helped with the logistics and making this event happen. So thank you to all of you. Before I commence, I just wanted to also mention, the British Chamber has recently launched in Singapore has recently launched a Road to Net Zero campaign. This is and was going to be a huge year for the UK government in terms of its hosting of COP26 in Glasgow in November. That event has been postponed due to the COVID situation, but the kind of messages that are coming from that event, the commitment and the desire to reach a sort of net zero emissions contribution by 2050 are still very much in play, and I'd draw your attention to the British Chamber's Road to Net Zero campaign, which is highlighted in the front slide here. Okay, before I introduce the panelists, we've got a fantastic, very experienced and reputable panel today, but before I introduce them, I just wanted to set the scene for you. So Sabina, if I could ask for slide 1 to be shown, thank you. Okay, you may be aware that the British Chamber in Singapore has held a series of events on energy transition over the last few years, as well as periodic events on the future of finance or the financial sector being so important here in Singapore. This webcast we're hosting today was going to be a status check on for the audience on how the finance sector was supporting the goal towards energy transition. I think it would have been quite a straightforward discussion, this time in January or late last year. But the overlay of COVID-19 really has brought everything into question. The impact is huge. We're not sure how the priorities for banks and financial institutions are going to change. And we're not really sure about how the finance sector is going to continue to support clients and projects in this sector. So that's some of the topics that we're going to explore today. Now, the first slide I unashamedly purloined from Aon's C-suite series on credit solutions. One of my fellow committee members, Paul O'Keefe, is responsible for some of the conclusions here. What I wanted to highlight on the left-hand side was really the kind of magnitude of the impact in terms of effect on GDP growth. The graph shows a percentage reduction in GDP growth. Obviously, huge impact, 25% reduction in GDP growth. But also, probably most importantly, is the kind of scale of magnitude compared to the global financial crisis of 2008 and 2009. That in the finance sector is really the touchstone for how bad things could get, and we're now facing a situation which is potentially significantly worse. On the right hand side, I wanted to present a kind of impact, what the impact of that might be. And what we're seeing is, or what's being predicted by Aon in this report is that insolvencies, both on a global level, but particularly in this region, in the pink bar there, bankruptcies and insolvencies, massive jump, 20% jump in bankruptcies and insolvencies. Now, you can imagine that has a real impact not only on the companies themselves, but also on their financiers and their bankers. Okay, slide 2, please, Sabina. Now, turning to energy specifically, I wanted to just, highlight the impact of the issues that we're currently facing. Now, on the left-hand graph there, you're seeing reductions in energy, in electricity demand in various countries, time from the day on which they started lockdown periods. So, I think we're all aware that this has been a massive impact on not just electricity demand, but I could have chosen graphs showing crude oil demand or refined products demand. We really, all of us understand that certain key commodities, there's a major impact on many of the things which perhaps we took for granted previously. The question, of course, is how quickly is this likely to recover? Will it recover to the previous levels? Now, if that's the yin, on the right-hand side, I present the yang, and that is, an interesting graph sourced from CB, where in the EU, specifically related to the EU, there's this kind of lockdown period has really promoted a huge reduction in CO2 emissions, 39% reduction in CO2 emissions from the EU's electricity system. Now, that's staggering, but perhaps more interestingly, it's promoted a prioritization of renewable energy, hydro, solar, other renewables, at the expense of traditional fossil fuels. And I think, that's a very, in some people's eyes, that's a very positive situation. And question, of course, is, is that sustainable? What advantages does Europe have in terms of its ability to choose how it generates electricity compared to, say, other regions like Asia? Next slide, please, Sabina. And this is the last slide of my kind of intro setting. What I wanted to highlight here was just the huge amount of investment in renewable energy that there's been, right the way back since the early 2000s. The graph shows billions of US dollars. You can see that kind of peaking at sort of 160 billion in 2017, that kind of period. A little drop off recently, but this has been a building story in terms of the way that banks and financial institutions have supported projects and companies in China, in Europe, in the States, and increasingly in the rest of Asia Pacific. We've seen huge changes in the way that electricity and energy is produced around the world, particularly in developed markets. We believe strongly that this will continue in Southeast Asia. And again, I think that it's important to note that this is not a kind of overnight solution. If you want to invest in renewable energy and in energy efficiency, in energy transition, it's important that the kind of tenements of the policies required to promote that investment are perhaps take over decades, not just over the course of, say, a few months or a couple of years. Okay. I think I'll move on to introduce today's panel. An extremely experienced group of people. I'm really very proud to have that they've agreed to take part in today's event. A mixture of export credit agencies, multilateral organizations, commercial banks, and it really is a real kind of spread of the finance sector. And part of the goal of this event today was to really have a kind of fireside chat with the finance sector and just get their impression about how things are playing out. Let's start with introducing Nikki Kent. Nikki is a sustainable finance professional currently leading the World Economic Forum's Sustainable Development Investment Partnership for ASEAN. The institution provides a platform for in-country public and private sector dialogue, embedding sustainable development finance into national action plans. Prior to joining the forum, Nikki had established a sustainable finance consultancy in Singapore and also co-founded an energy efficiency FinTech startup. With a long career in corporate and institutional banking across the UK, Australia, and Asia Pacific, Nikki became an early champion for the development of sustainable finance in this region. Welcome, Nikki. Now on to Richard Michael. He's currently country head of UK Export Finance in Indonesia. He's based in the British Embassy in Jakarta. He has worked in Asia Pacific for over 30 years and has been based in Indonesia for half that time. He's been involved in project and export finance for most of his career, most recently at Indonesia Infrastructure Finance, as well as previously with Barclays and Standard Chartered. Welcome, Richard. Thanks for joining. Khalid Latata is a Dutch national. He's been living and working here in Singapore for more than a decade. He started his career nearly 20 years ago with ABN AMRO, where he was working with its large European energy and commodity clients. He's now working with Standard Chartered. His work for Standard Chartered, he specializes in a broad range of financial services to companies that operate in the oil and gas sector. That includes M&A work, project and acquisition finance, capital markets transactions, and also risk management solutions for the bank's industry clients. Khalid is actually responsible for the bank's activity in the downstream market, covering refineries and petrochemical installations, as well as energy distribution and energy infrastructure. Khalid, welcome. And last but by no means least, Jackie Sutani. He's representing the Asian Development Bank here today. Jackie was appointed Director of the Infrastructure Finance Division that covers East Asia, Southeast Asia, and the Pacific Islands in April 2017. He's got over 30 years of experience in Asian infrastructure lending and advisory. And prior to the ADB, Jackie led the risk function of Siemens Financial Services Asian Commercial Finance Unit. He was their regional chief risk officer, which included a remit for China and India. Huge job. And before that, he actually worked at Chase Manhattan Bank, which is now known as JP Morgan, as Director of Global Power and Project Finance. He was also Director for Global Project Finance at Credit Suisse and Head of Project Finance Asia Pacific at KBC Bank for 40 years. Quite a CV, Jackie. Welcome.
Thank you.
Okay, let's get these very well qualified people to give you a viewpoint today. Let's look at oil price and also the COVID-19 pandemic. A kind of double whammy. We've all made huge efforts to ensure business continuity and keep our commitments to customers and ensure the well-being of our staff. But how, and I'm going to direct this question initially to Jackie, how would you assess the impact on your organization and what are the big challenges that you are facing this year?
Yeah, thank you, Ben, and it's a pleasure to be here. So I think obviously the Asian Development Bank has really moved very quickly. We all went straight into lockdown, so the majority of us are working from home. But straight after this hit us, we announced a $6.5 billion package for our member countries. Very much counter-cyclical measures to various governments. So within days, we had an approval for a $1.5 billion facility to the government of Indonesia, a $1.5 billion facility to the government of the Philippines, and that keeps on going. So Bangladesh, India, a number of our member countries have been given a large package for what we call counter-cyclical measures. There's also, we quickly moved from that $6.5 billion. In April, we tripled that commitment to $20 billion, of which $2 billion is being allocated to the private sector. So we're moving very fast to try and find ways to support our member countries. The primary focus is very much first and foremost on the health and welfare of our member countries and their people. So very much the focus is on hospitals, the supply chain for protective masks, testing, and the like. Of course, we are also focused on infrastructure, whether it's renewables or transportation. But that is, to answer your question, Ben, is taking as sort of a second priority, because the real focus is to get people back to work and back to their health as quickly as possible. The other thing we're just waiting to look at is, obviously, as you said, it's a double whammy. So we are obviously, like most financial institutions, looking very carefully at our portfolios to see what impact there might be in potential restructurings or some debt relief that may come about. But the impacts of that, I'm pleased to see, is not yet there. So I'll stop there. Thank you.
Thank you, Jackie. Richard, I'm going to turn to you and ask the same question. I believe you've really had all hands to the pumps at UK Export Finance. Is that right?
Yes. Well, obviously, as we're all based in the embassy, it's the whole of mission effort when there's a crisis that arises. So I was actually working for a while on getting Brits out of Bali back home to the UK. So that was a very interesting and challenging experience, but I'm now back on the day job, so not to worry about that. But of course, there has been a shift of emphasis in many of the roles within the embassies. So for example, our healthcare team is obviously now very much involved in importing PPE from Indonesia to the UK, and rather than focusing as much as they used to on trade from the UK to Indonesia. So you can see how people's roles do shift at a time like this. But one thing that I could say is that obviously, like ADB, the ECAs come into their own at a time like this. UK Export Finance is very much open for business. And I think during the GFC, we saw that multilaterals and export credit agencies actually were there to shore up projects and come in and get projects moving forward when liquidity was drying up amongst the major international banks. And actually, there's a couple of developments that took place even before this started, which actually makes us more resilient at times like this. The Chancellor of the Exchequer actually announced just before the crisis hit that our direct lending capacity as UK Export Finance is going to be increased. He gave us an additional £3 billion, and actually 2/3 of that, £2 billion, was earmarked for renewable energy. So that gives us more firepower, because obviously we don't have to, when we're lending direct, involve a bank in between us and the borrower. So that means that we don't have to rely on the liquidity being there from the international market. And then the other development actually, which has been ongoing for a few years, is the local currency financing approach that we have. We can provide guarantees now in more than 60 countries around the world. In fact, most of the countries in this region, we can provide a local currency guarantee. And that means, again, that we're able to provide cross-border support to the local banking sector. And in many cases, those might actually be more liquid as time goes by than the cross-border market. So I think those are examples of things that we can do to increase the resilience of the finance sector at a time like this.
Thank you, Richard. I'm going to ask Khalid to comment from a commercial bank perspective. Clearly, maybe aid packages and such like aren't perhaps the the day-to-day priority for commercial banks. How would you seen the impact since this crisis start to hit?
No, you're right, but business has not stopped. I think there's been a flurry of activity around supporting customers and clients that were facing liquidity difficulties and kind of carrying them over this challenging period. And we're also still reviewing new business. Obviously, there's lots more scrutiny and all the models have to be rerun and multiple sensitivities have to be run around near-term events, but there's still new projects being supported across the board. Standard Chartered is also very active as a result of its legacy in frontier markets and developing nations. So they are a little bit more exposed, I would say, because they don't have the healthcare infrastructure that some of the more developed nations have. So we're very well aware of that, and the bank had also earmarked about $1 billion of loans that they wanted to deploy quickly, so they could support local communities in manufacturing, PPE, sanitization agents, or even ventilators, if you will. So it's very much focused on the short term still, but I guess we're kind of slowly shifting gear and getting used to it and looking further beyond. One thing that is on everybody's mind is it's uncertain how long this will stay with us and how it will impact credit migration. And of course, there's a lot of anxiety around how that will impact capital of the bank and how much we need to allocate to existing loans in the future. So people are a little bit careful around that.
Thank you. And I should ask to Nikki as well. I mean, how has your work impacted in the last few months?
Yeah, the forum really put together very quickly a COVID action platform, which is an additional platform to the other work that the forum does on a regular basis with the public and private sector. And the purpose of that was to be almost like a counterbalance to what was happening at the time around nations and companies and financial institutions and everybody really starting to look inwards, and that really attempt to try and figure out what's happening in my patch, so that I can make sure that I shore it up. And so the COVID action platform was very much intended to create a dialogue and supporting that dialogue around regions and in countries and across sectors. So specifically for the SDIP platform, which is the one that I work for, it's very much focused around what's happening in country, and there was a number of conversations that were very helpful in country for providing input to developing countries where they may not otherwise have had that ability to reach into the COVID conversation. So things like what is happening around the distribution of PPE, of healthcare, of necessary resources to deal with the immediacy of the problem. The interesting thing about that is that has now shifted a little, and so we're now starting to see that shift into, okay, things are sort of calming, and while Khalid very rightly pointed out, this clearly isn't over yet, and we don't quite know where it's going to go from here. The conversation shifted from that immediate urgent response to one that is, okay, we know we've got this very large problem on our hands. What does a recovery look like? And so we've started to transition that conversation into what would a new economic platform look like, and of course energy is a large proportion of that, particularly in support of the Paris Accord targets that we don't look like we're going to hit. Maybe we will, now that all of the COVID has brought down emissions dramatically, so perhaps there's a chance. And so that transition conversation is now front and center, and so we're working actively on creating the dialogue and then the agendas around that with our partner.
Fantastic, Nikki, thank you. I'm just going to actually direct the next question to Richard and Jackie, because you have governments as shareholders. I mean, as a bystander, one sees the governments act, very quickly. Direct aid measures, sort of interest rate cuts, buying bonds, unprecedented sort of bond buyback programs. What do you think longer term, the governments, do they have bullets to sort of continue the recovery? Are they able to implement measures to support a recovery? Is there more they can do?
I think in this region, governments have generally, I mean, it's obviously oversimplification to say everybody's reacting the same way, but in many countries, including, for example, Indonesia, there is the memory of the Asian debt financial crisis and the GFC. And there's a reluctance to dig too deep because they know that when the crisis is behind them, they will then face issues with the debt to GDP ratio, the budget deficits. So Indonesia, for example, very reluctantly just increased its spending to take the budget deficit over 6% this year. Legally, it can have no more than 3%, and it initially went to 5%, but they realized that wasn't enough. But long term, there's going to be issues because obviously there isn't any safety net in many countries. They don't have the central bank there to do whatever it takes to get everything back on even keel. So there is a concern that there will be knock-on effects. We don't know if there's going to be a second wave. We don't know what the impact will be on the domestic banking sector in many markets. And then the long-term implications of having people coming out of the COVID crisis who just don't have savings anymore, don't have any proper livelihoods. So that is a concern, but right now we really don't know how it's going to pan out.
Jackie, from your perspective, you mentioned very speedy measures, but is there more that is and can be done?
Yes, certainly, Ben. And first of all, I echo what Richard said. So I think governments, not only here in Asia, but even globally, have learned a lot from both the Asian financial crisis and the global financial crisis. I mean, one telling point is when you compare the global financial crisis with what's going on now, I don't necessarily see this as a crisis on the banks, at least yet, because I think a lot of the banks have learned from the global financial crisis. They've shored up their capital positions, their liquidity positions, and the like. So I think the banks are much more stronger and are able to withstand what they're experiencing, at least for now, than compared to the global financial crisis. So in a way, there's a lot of lessons learned from the two previous crises, but in a way, what we're facing today is unprecedented. And I think still the jury is out how long nobody knows how long this is going to continue for. So I think the key thing is that the real impact that we're all realizing in this crisis is the man or woman on the street, as I would say. That's the real impact. And I think governments are going to have to do a lot more in that regard. But, it's not going to be only governments. It's going to be export credit agencies like Richard's. It's going to be all the multilaterals. It's going to be the commercial banks. It's going to be corporates who really have to dig deep for all of us to get out of this crisis, because I don't think anybody really knows how long this is going to go on for. So really it has to be a combined effort, and then it really is, at the moment, the big concern is all about saving people's jobs and livelihoods. Thanks.
Khalid, I kind of expand on that question a little bit. Do you think commercial banks are ready for this kind of digging deep? Do you think they're better prepared now than perhaps after the global financial crisis? How does it feel within a commercial bank's setup?
Oh, Ben, I would agree with Jackie's observation. We're definitely more ready, and this was also, I guess, to an extent, we saw it coming. Standard Chartered was exposed to it early because we have big exposure to China as well. So maybe we had a little bit more time to prepare, but due to regulation and improvements that were made after the financial crisis, I think commercial banks are more resilient. But also, to Jackie's point, it all depends on how long this is going to take, right? in the end, everybody could run out of money, and then what do we do? So the longer this stays with us, the more it kind of rips the fabric of the society and economy apart, right? And the more difficult it will become to mend that. So hopefully, we'll find a solution for all of this soon, and we can go back to some level of normalcy. I think another thing to consider is also that there is a lot of support from governments and other agencies that has put off insolvency, defaults, and things like that, right? But once they kind of run out of fuel, then there will be one big wave. So I think there's a little bit of fear what is happening under the surface, right? Because right now we're all in lockdown. People are protected by law against default. They get emergency loans and emergency liquidity. But if we don't manage to kickstart the economy, everything will suddenly come at once, right? Rather than well spread out. So.
And thank you, Khalid. So turning to Nikki, is there anything there in terms of the government's roles, in terms of the roles of commercial banks, ECAs, multilaterals, which gives you encouragement or gives you great concern?
Well, the initial response definitely around development finance and direct support was quite scary. So around 80 to 90 billion immediately was withdrawn from the developing world in terms of direct financing for supporting countries. That was a bit of a knee-jerk, it looks like, because that hasn't sort of really continued at that pace. So what has been really pleasing is that there's something in the realm of 240 billion that has come from multilaterals in committed support over the next year or so. So there's money that's really being pushed towards the developing countries, which I think is really important, because whilst this has become but clearly it's a global issue. We're all in it. No one's escaping this, although there's perhaps some remote places that feel that they are. I think it's possibly a matter of time unless they keep their borders very tightly closed. But the really important thing around this is that if governments are in the position, and many of them are, to raise funds and spend money with very, very historically incredibly low cost, then surely this is the time. And so whilst there's a deep reluctance to, I think it was Richard's point around the extent of concern for developing countries to dig too deep in terms of going further and further into debt, there is certainly a capacity in the developed world to really step up here and perhaps rethink. And there are many conversations going on through the OECD, the IMF, and so on, who are talking very specifically or being pressured, I think, by the developed world around cancelling out debt obligations. Actually, not just suspending them, but cancelling them. And that's been on the table, I guess, for a while, but at the moment it is really coming to the top of the agenda, because this is going to have some long-term impacts, and unless there's some long-term restructuring done globally, then perhaps there's not really going to be the opportunity to come out of this with any strength. With any really, so we've got to draw a line, if you like, draw a line under where we are and try and move forward from that, as opposed to keep sinking further.
Thank you. Thank you. Hey, I want to turn to kind of more energy transition topics. There seems to be a divergent view on whether the current situation will likely accelerate or decelerate this kind of move towards energy transition. As I highlighted in my slide today, prior to the COVID-19 crisis, we were moving very fast in certain regions to shift towards more renewable energy, to improve energy efficiency. whole range of measures to reduce carbon emissions. I just wanted to get your view. What's your assessment? Is energy transition still an imperative, a moral obligation? Has it dropped down the list of priorities? For your own institution, do you think that there will be a continued drive to finance and to support the energy transition? Perhaps I could turn to Jackie first, and then to turn to the other members of the panel.
Yeah, no, thank you, Ben, and it's a very important question. So I think there are two parts to this. So we have to recognize that with COVID-19, energy demand has come down substantially, and there's a very interesting IEA report that talks about the different types of energy that have come down. So, I mean, from the ADB's perspective, it's very pleasing to see that the use of coal globally has already come down this year by 10%, and that's a pretty dramatic fall. Gas by 5%, and the only one that has kind of maintained its share is renewable energy, and that's primarily because in a lot of countries, renewable energy is given some level of priority. So that's good. The lower level of demand has been nice. I mean, I'm looking outside my window at the skies in Manila, and it's a nice, beautiful blue sky out there. So that's really great. But we also, the flip side of this is that for banks, for ECAs and multilaterals, for any new project we do, particularly we use something called project financing to finance most energy projects, you need to do your due diligence. And due diligence means from not only just visiting the company and getting lenders, advisors on board, but it also means going and seeing the physical site. That is just not possible in today's environment. You can't get onto a plane. So there will be delays. There will be delays because of a reduction in demand. There will be delays because banks, ECAs, multilaterals cannot do their due diligence. We have to find ways around this, whether we're hiring local consultants to deal with that. But certainly from my perspective and from the ADB's perspective, we're not, we're doing everything we can to continue with the momentum for renewable energy. You may have seen in the press just a few days ago, we signed a 10 megawatt wind project in Thailand. This was the first wind project which we coupled with battery storage. And that is a key, again, development in the renewable energy market, is to develop battery storage to increase the use of renewable energy. So we're very proud of that. It's a very small project, but to get a deal like that signed a few days ago, when we're all sitting at home, is a remarkable achievement. We did it with another Thai bank. So I think we will do everything possible to move the momentum forward on renewable energy whilst recognizing the challenges we face. Thank you.
Jackie, thank you, and congratulations on your transaction. Richard.
Thank you.
Yeah, well, Jackie mentioned the trend obviously has been accelerated a bit by the current crisis. It's good to see, coal demand fell in Europe by 2/3 apparently. The UK has actually now generated electricity from renewable sources, not touching coal for I think 40 days now, which is a record. So these are all great developments, and I think it will accelerate the trend. But I think it's definitely a question of where in the world are you, and where are you along the path in terms of energy transition? Because European economies, for example, many of them can, when they see demand drop so substantially, it gives them the choice then to choose the mode of power generation, and they're choosing to switch off coal, which is good. But in developing markets, especially in this part of the world, the energy transition is at a very early stage. It's great to see sort of pathfinder deals like the one that Jackie has just signed. UK Export Finance has been involved in offshore wind in Taiwan, for example. But most of the countries don't have that luxury. When the demand plummets, they won't have the ability to switch off substantial parts of their fossil fuel generation capacity. And it's going to put the brakes, unfortunately, on new project development, because if you're a utility in a particular country and you've seen the demand fall off the cliff, you're not going to straight away invest in new capacity and just exacerbate your financial situation. So I think, but I think now is a good time for people to take a pause and think about policy. I know that Vietnam is having to extend its PPA arrangements, which were originally expiring at the end of this year. And you know, you do have new developments in policy. Indonesia is going to be introducing a new tariff regime for renewable energy, having experimented with something that didn't really work for the last 5 years. But you know, the UK government is stepping up and doing its own part. We have 2 programs which I can give a plug to, if you don't mind. One is the Renewable Energy Program for Indonesia. We are actually going to be financing the studies for pilot projects. And in the region generally, we have a low carbon energy program, which is covering 6 countries within the region. And we are supporting energy efficiency on the one hand, and more importantly, perhaps for this discussion, green finance. So in many of the markets, the focus is on how do we get more bond issuance, more green finance available, both internationally and domestically, and the policy framework that we need to be able to do that. So I think, you know, the trend will continue again when demand comes back, but I think we're going to see a pause, unfortunately, in those markets where they haven't quite got to the stage of energy transition that they then have the ability to switch around.
Thank you. Nikki, could I ask you the same question? You already talked about some of the challenges in terms of the conversations you're having in country. Is it still on the agenda? Is it a moral obligation for you to continue your work and your mission?
Yeah, very much so. But as I said earlier, and I think has been alluded to also, is that it's shifted on the agenda. So it's very much a broader conversation around, okay, whilst the COVID situation is being dealt with as a priority, what else can we do behind the scenes to lay the right conditions for the transition to happen? Interestingly, the forum published a paper just a month or so ago, which clearly was in writing for some time. So I think their timing was, you know, accidental almost, but a fantastic timing. It's called the Energy Transition Index, and what it does is just maps out the you know, where the world is in terms of energy transition, and it's really it's quite an interesting map to have a look at, not only, you know, where the point in time. So where are countries at a point in time, and there's no surprises there. Developed countries are ahead. Developing countries lagging, you know, that's a generalization, right? There's exceptions to that, but generally that's the case. But if you have a look at the pace of change, it's a different story. And the pace of change, you see countries like India, for example, who are ahead in terms of pace of change. China, Taiwan, Thailand, and parts of the Mekong are doing reasonably well in terms of pace of change. And so I think whilst that's a historical look, and we know that we're disrupted right now, that's a trend that I you know, we're hoping to support to move forward in terms of, you know, what does it look like? How do we make sure that there's the right parties at the table in order to maintain that financing and support policy change and support that needs to go along with it? So very, very interesting, very interesting maps. But clearly, the other thing that it does is it talks about the enabling dimensions, and that none of these will be a surprise to anyone who's worked in the energy transition industry or sector. You know, investment, regulation and political commitment, institutions and governance, infrastructure, and innovation, human capital. To Jackie's very poignant point, you've got to have the people on the ground to be able to do this. And the energy system structure. So you take one of those out and you could probably still move ahead. And we see this in some countries, particularly in some of the developing countries. And I have to say, as an Australian, I can use this as an example where, you know, the political will is not there, but the private sector has seen the opportunity and just run with it, right? So in some circumstances, you can knock out one of these and still move ahead. You knock out one in more than one, it's starting to look a bit difficult. And this is where we're trying to sort of make sure that there's as much as possible of these dimensions in place to support countries continuing or starting to move forward on that renewable, on that transition journey.
Thank you, Nikki. That's a fantastic answer. I'll ask the question to Khalid. It's important that the commercial sector, you know, we get the view from the commercial bank sector. I imagine, like my bank, Société Générale, that Standard Chartered has also made sort of big commitments towards energy transition, managing its own energy usage. Is it right to say that you're going to stick with those commitments, Khalid?
Ben, you're absolutely right. We made very big commitments. I think we're going to lend and support with 75 billion into sustainable and renewable energy by 2024. We're part of the Katowice initiative, which your bank is also part of, which is around measuring greenhouse gas impact of things that we finance, and after measuring, it is kind of steering towards Paris Agreement alignment. So all these commitments have been made, and I cannot see us waver on any of these commitments. I think it's an opportunity, and it's also a responsibility, especially in the markets that we are active in. Then if you look at the more conventional energy sources, we also had commitments made around steering away from some of those, predominantly coal, but also looking closely on at the impact of oil and gas, and at least how some of the risks there from an environmental perspective can be managed. So I don't think that's going to change just because of COVID. I think to Nikki's point, in the end, it's the governments that have to prioritize what is desirable, and we're there to support them. So I guess if there's less projects, it's going to be more difficult for us to achieve our targets, but we will keep supporting those projects that are there. I think in the short run, the COVID will have quite a big impact on the transition, because weakening economies in the emerging markets, weakening currencies will make the investments more expensive in local currency. So it will be more difficult to make some of these projects work from an economic perspective. And on top of that, let's be honest, I guess another impact of COVID is that capital has become more expensive, at least in the short to medium term. So that will also make it more challenging to make some of these projects work from an economic perspective. So it will definitely put a drag on the transition. But I wouldn't say that's necessarily because the commercial banks are stepping away from supporting it or reprioritizing. I think it's just more a reality of how the economy works and priorities of the host nations.
Thank you, Khalid. Insightful comments. Out of all the commercial bankers in the world, this is why I approached you first to be on this panel. So thank you for those comments. Hey, I'm conscious of the time. We've got 10 minutes before we sort of turn to Q&A, which there's a lot of. If you do want to ask a question, there is a Q&A button on your Zoom account, and you can list your question there. I'm going to ask a bit about the kind of, one of the questions we often get in these kind of finance forums is, you know, perhaps I'm a smaller developer, I haven't got the A grade rating, I'm non-investment grade borrower, or project company or sponsor. You know, in bad times, suddenly I feel like the finance sector's kind of clammed up and it's no longer kind of open to me. I just wanted to to touch with all of you, you know, where in a recession environment, in bad times, where do people go to access finance, you know, perhaps for the sort of smaller sponsors? Where would you advise them to kind of look? The bond markets, the loan markets, the export credit agencies, the multilaterals. You know, it's a huge menu of choices for the equity markets. It's a huge menu of choices for sponsors and corporates. And they're going to be in significant stress and perhaps in need of finance more than ever before. Where would you advise them? Let's maybe start with Jackie, as such an experienced professional.
Well, thanks, Ben. It's a slightly, well, I wouldn't say, well, for want of a better word, slightly tricky question, because I would not necessarily distinguish too much pre-COVID-19, post-COVID-19, or current. So the answer to your question is really first and foremost from multilaterals like the Asian Development Bank. Our role is not to crowd out commercial banks like yourselves and Halim. So if a transaction can be done by commercial banks, then you should be actually telling multilaterals like the ADB, why are you involved? We can do it ourselves. So that's point number one. So we would actually even encourage, we want to work with commercial banks like yours. That's not our job. Now, as Richard also said, during these kind of crises where there are limited options, we're open for business. We're happy to talk about projects and small developer, big developer. Our key role is that the project needs to have a very strong development impact on our member country. So that's our real focus. And then because we are a bank, particularly on the private sector side of the ADB, which I am part of, we have to make sure that the project, that whether it's whatever kind of company, is bankable. So it has to withstand these kind of current situations, just like any other scenario. So we will have the same rigor when we're looking at a company's project, irrespective of the situation. So that's my short answer to a very interesting question. But bottom line, we're open for business and happy to talk to everyone. Thank you.
Thank you, Jackie. Richard?
Well, of course, I'm a bit biased, aren't I? I'll be persuading people to look to ECA support. But I think there's a very good reason for that, because as Jackie said, it's not necessarily pre and post COVID. UK Export Finance recognized a few years ago that sometimes the smaller transactions fell by the wayside when the underwriting teams were involved in a huge glamorous project. They would not necessarily pay so much attention to the smaller transactions. So we actually set up a dedicated team in London that looks at the smaller deals under $10 million. So they are focused only on putting those through. And we actually have a product. It's a bit confusingly called supplier credit as opposed to buyer credit, but actually the structure is more or less the same. And those are for the smaller transactions where we actually have a panel of dedicated banks that are available on our website that have a master agreement with us, and that simplifies the documentation for any transaction that we do. So that means that we're quite open to deals that are even hundreds of thousands of pounds sometimes. Of course, we can go up to, the sky's the limit in terms of deals. We've done deals of £6 billion before. But, we're open and we have the appetite to support those projects. It may not be done on a project finance basis, of course, because it doesn't, as we all know, it doesn't really make sense to do a complicated project financing with all the due diligence required for a deal of only 5 or 10 million. But some of these energy projects we're looking at are actually in that bracket. So we have to find a way. I mean, I've been talking recently to tidal power developers. They're never going to do projects more than, say, £20 million in one go. So we have to do it on a more of a corporate basis, perhaps a contract with the utility rather than a PPA, an EPC contract. But we are definitely open to support those kinds of companies.
Thank you, Richard. I'll frame the question as well for Khalid. You know, obviously Standard Chartered's got a huge retail banking presence, banks a lot of small and medium-sized enterprises also, as well as the investment banking work that you do. I mean, do you think that it's there's something for everybody in your bank?
I probably echo what Jackie said. It's a bit of a yeah. I don't know how to best say it. I focus on the bigger projects. I think if you just look at project financing, and you know it, Ben, because that's the space where you're active, right? Overhead is quite high, so it does not work for small projects. And also, if you look at project financing, you accept that you don't have recourse, but still you wish that you have strong sponsors, right? So that if, God forbid, something happens, you know, you can still come to the table and see if you can find a solution, rather than suddenly owning, let's say, a wind park with a consortium of banks. So I think that's why, and also the work for a small project or a big project is the same, right? So I think that's why there is unfortunately, and I'm not saying it's right, because I think we should support everything, but unfortunately in the market there is a preference for more established players and larger projects, and I think that preference becomes stronger when times are more difficult. I already referenced the fear around credit migration, which is a real fear, and it will happen. Now, if you're dealing with a smaller entity that has probably not as good as access to capital as a larger entity, you will be more affected by that. So I'm just throwing out the considerations that the market has, right? And I think it applies across all institutions. And but having said that, yes, if you're looking at small things, project finance does not work. Richard said it. So you'll have to look at corporate solutions, and then indeed ECAs are very helpful, and they can make things like that happen. And we work with a lot of ECA providers as well, also on smaller projects and also on corporate ECA projects. I think another untapped source is probably private capital. There's a lot of funds out there, infrastructure funds, even funds that want to take on a little bit more risk, that could support these kind of projects. But I guess the challenge is kind of connecting people and finding your way around the forest, if you like. And again, for smaller players, that is probably a little bit more difficult. So I guess that's definitely where financial institutions and policy institutions have a role to play, to facilitate that and maybe set up platforms where people can connect or even earmark funds for smaller projects, and that's what banks do, right? That's also what we do. We do a lot of smaller stuff as well to support local communities, but that's outside of the normal business.
Khalid, thank you. Nikki, I'll just ask you the same question. The people you talk to in country, do they tend to struggle in tougher times? Are you able to assist and help them to succeed in raising finance or getting their projects off the ground? I know you've got some quite innovative methods of financing yourself, which you promoted in the past.
Yeah, so I'm going to refer my answer to my past as opposed to the work we do now at the forum is more at a sort of a broader level across the country as opposed to specific deals. The interesting thing that, the thing that I find really interesting is the new energy innovations around distributed and microgrids and the way that those and they're very often involved in new technology, whether it be digital blockchain or other fairly cutting edge technologies that traditional financiers are often find very challenging, not only from the new technology perspective, but also because the transactions are smaller, and so the scale just isn't there to make it worthwhile. That localizing question is a big one, and how there's definitely from what I've seen, an appetite for a more localized approach and structuring of some of these more innovative funds around how to raise capital and make it accessible for solutions that are being provided in those sort of local contexts for the local communities, for access to power, for clean power, and so on. And so I think in my answer, what I want to emphasize is that stuff that I think that the bigger financial institutions who've been involved in the energy infrastructure on a massive scale, perhaps there's another piece around the smaller localized piece, which and the answer to that is different, is very different. But the innovation, I don't think, stops just with either or. And one of the things that I wanted to raise was cooperation and collaboration in financing has traditionally been very tricky. Borrowing Jackie's word here, very tricky, because financial institutions are set up to compete, and so it isn't always easy. Of course, syndications are an example of how that works very well, but also an innovation in blended finance has been is relatively new, and it's been quite successful, with $15 billion a year of blended finance over the last 5 years. And so there's an opportunity here, I think, for quite some innovation in how to push forward the transition in developing markets, especially where there's a need for a more localized approach.
And you're talking about a private and public kind of blend, is that correct?
Public, private, and different tranches in terms of risk taking. So how do you pull those parties together in a way that everybody meets their objectives, but the transaction is supported in ways that you couldn't otherwise get if we have a single institution trying to look at it through their lens, through their requirements. Yeah.
Thank you. I'm conscious of the time. It's 11:03. I'm going to move to Q&A shortly, but I just wanted to ask you a kind of rapid fire question, if you like, to each of you. How do you think 2020 will be recorded when we're looking at the energy mix and emissions reductions, in say 10 or 20 years time? Do you think this is going to be a kind of blip, a drag on the progress that has been made, or is this an opportunity to perhaps do something different? What's your take on the kind of lasting impact of this current crisis? I'll put you on the spot, Richard, first. No, you're just on mute, Richard.
Yeah, so it's difficult to say what the future will hold when we're in the midst of all of this. But people are saying that the new normal, to use that ugly phrase, will involve a lot less of us getting on planes, sitting in offices, and other behavioral changes that probably, I think, will be resulting from this. And that will actually help the overall impetus towards an energy transition. But I think there's also a geopolitical dimension to this as well. I can't help but feel that the Asia century didn't quite happen yet. We're already at 2020 and it doesn't really feel like the Asia century yet, but I think it's going to be part of the tipping towards Asia long term. That's just a personal view, but I think that's the case.
Thank you. Khalid, perhaps turn to you.
Well, I left my crystal ball downstairs, but I'm actually a rational optimist. I mean, humans have always found solutions to our previous problems, right? So I think we'll find a solution to this as well, and I think in due time we'll just be living like we used to. I think some very, very big wheels have been set in motion, and in the near term, maybe they might slow down a little bit, but I think in the long term, the energy transition will just, you know, unfold as on the path that it was on. I don't necessarily think this will accelerate things, but maybe slow things down a little bit in the short term.
Thank you, Jackie.
Yeah, I think, again, echo what both Khalid and Richard said. I think 2020 will certainly be an inflection point. Now, whether we write this paper on 2020 at the beginning of 2021, or we wait till 3 years down the line when we really know the impact is another question. But I certainly think we came into this with a lot of positive momentum on renewable energy, just globally. Companies like the likes of NG and a lot of others moving towards renewable energy, a lot of commercial banks focused on renewable energy. So there was a lot of great positive momentum coming into this. Question will be really, 2020 could be a real inflection that this pace will accelerate when governments and more companies and more banks realize that this is the way to go. Or it might be this thing will be over and we're all back on planes. You know, governments are wanting to have cheap coal-fired power plants. Who knows? But certainly, I think for all of us sitting here at home, this is a time to really reflect, where do we want the world to go towards?
Thank you, Jackie. Nikki?
Yeah, I get excited about innovation. So there's nothing like a crisis to spur innovation. So I think this is a really interesting time, and I think it's a time for reset. And the reason why I think it's that is that the conditions that we experience now are excruciating in some ways, around lockdown, around not being able to do the things that we like to do, about not being with people we want to be with, about not being able to get our projects done and due diligence and other. But at the same time, we have clear air, we have clear, we have time with family, we have less less time away from family because people were always on planes. We have a whole lot of really positive things that are coming out of it, and this is being seen at a grassroots public level for the first time, right? Oh, so that's what we can have if we switch off that coal-fired power station. Now I can see it, I can feel it. So I think there's a real awakening. The other thing that I think is and we haven't really touched on this, is the relative price of solar to coal. I think Jackie probably alluded to it just then, and it has been remarkable, the drop. And I'm not saying that solar's, you know, the penultimate, but I'm just, as an example, you know, it is. I was looking at a report that showed that the price now of solar is a quarter of what the IEA predicted 10 years ago. A quarter. So if we're trying to project forward now, are we caught up in our own paradigms, and do we actually need to think about this in a much more innovative way, in a much different way than, okay, we'll go back and we'll get on planes and we'll do our own thing, because maybe that's not the right solution. So stakeholder capitalism, collaboration, technology are sort of the three key things that I think are going to be drivers of the way we can reset if there's enough will around it. And I think that that's going to play through to the energy industry in a very big way.
Nikki, thank you. I just love the way you're so positive. I really appreciate your input today. Hey, this segues very nicely into a question we have from Thomas Brio. He mentions that to what extent should we've highlighted that governments should play a role, or that governments sort of set the agenda, as it were, but to what extent do we think the finance sector and our institutions should take a lead and actually promote the direction that we need to kind of head in terms of recovery and in terms of continuation of funding the energy transition. I think, Nikki, you've kind of hinted on your view in terms of innovation and time to consider where we are at. I mean, perhaps I'll ask Jackie first. You know, in terms of leadership, do you think there's a role for banks to push a bit harder and actually set the agenda?
Yeah, there certainly is, but I think also we have to be cognizant of what governments, particularly out here in Asia, are facing. So, you know, the immediate responses from the ADB are little but very important things, like we gave the government of Philippines $5 million to distribute rice to the really poor parts of the Philippines, and particularly on the outskirts of Manila. We financed a $3 million testing facility, because that's the current focus, is that, you know, I hear the phrase testing, 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 really, and that really needs to be the focus for all countries at the moment for us to get out of this crisis. So, you know, you can't tell governments, look, you need to do more renewable energy. That is not, they don't want to hear that just right. It's an obvious thing. We will do everything as ADB in terms of, I think the real focus for us is you've got to support governments and the people in these very difficult times. This is why we're rapidly, you know, providing $1.5 billion to the Indonesian government to, you know, help withstand these tough times that their people are facing. And hopefully they will remember people like us when we then go and talk to them about, hey, can you not do more on your renewable energy agenda? Now, with respect, is not, the focus is really to help these countries get out of the crisis.
Thank you, Jackie. Richard?
Well, I tend to agree with Jackie that it's not our role to tell governments what to do. We don't want to be the ones to preach to people. We're a demand-driven organization in UK Export Finance, so we're responding to the inquiries that we get from exporters for projects that are happening, which are often because government has decided to have the project, or because a corporate sponsor has decided to go ahead. So we're there to facilitate, but we're not there to necessarily dictate at the same time. But I think there is a role for, much bigger role for government post-crisis. Obviously, a lot of industries will be receiving support from government to keep them afloat. Many of the SOEs in Indonesia, for example, in the last couple of days have just been granted huge amounts of money to tide them over, like PLN, Pertamina, Garuda. But, you know, what would be good is if governments attached, I've seen the phrase attaching green strings to the support. And I saw an interesting example of France supporting Air France and actually saying, if we're going to give you this much aid to allow you to stay in business long term, you've got to change your approach to various things. You know, increase fuel efficiency and change the way you do business. And I think it's fair for governments to attach those strings when they have the power to do so. So I would hope that we would see a lot more of that in future. And as I said before, you know, the British government with its various programs is there to support regional governments to just do just that.
Thank you. Khalid, on the leadership question.
Sorry, yeah. I don't think we should preach that what was mentioned, but at the same time, I do think that we have a responsibility to listen to society and you know what people think is important, and I think if we listen carefully, we have some instruments to nudge society as a whole, maybe not individual governments, in the right direction, right? You're familiar with the equator principles, right? Which were a lot of banks, project finance banks, subscribe to. And they just do a lot of additional due diligence around environment and governance when they finance projects, and at least, you know, try and achieve better outcomes for everybody. I mentioned the Katowice initiative as well. So banks are starting to measure the CO2 impact of companies and projects that they finance. And after they know how to measure it and they have a certain platform for that, they can start steering towards the Paris goals, right? So I think financial institutions can do something and they can show some leadership. But they can't do it in isolation, right? It has to be part of a bigger movement, I would say. So I wouldn't suggest that they should be pushing in another direction than, you know, what the majority of people think would lead to better society or better outcomes.
Thank you. I've got an anonymous question here, and it's something we've not touched on yet. It's about the role that the insurance industry can play in assisting with investment and unlocking capital. Does any of the panelists like to sort of give their comments? So something that commercial banks use a lot in terms of credit insurance, and you know, again, the insurance industry, you might argue, is under some stress with perhaps a lot of claims coming its way in the near future. Do we still see that as an important strand in finance and successful finance? And does anybody have any views on the role that the insurance industry may play?
So Ben, I'm happy to quickly take that. So I think the insurance market, particularly out here in Asia, can do a lot more. We're seeing insurance companies invest in infrastructure assets. In fact, we see insurance companies as ideal long-term lenders because infrastructure assets, by definition, have a 25, 30-year asset life, and insurance companies actually need that kind of long duration to match with the life insurance premiums they sell. So it's actually perfect for them. We see insurance companies quite active in the infrastructure market in Europe and the US, but they're still developing out here in Asia. So I certainly would welcome more an increased activity of insurance companies. ADB is partnered up with a number of insurance companies to bring them into our transactions, but there's a lot more potential, I'd say. Thank you.
Thank you. Anybody else?
There's some really, I think there's some really interesting opportunities. Really, it's very much along the lines of what Jackie was saying. You're just developing that thought a little bit more. The domestic savings across this region is reasonably strong, surprisingly, actually. Now, how that's going to look post-COVID is going to be, is a big question mark. But let's just say for the moment, it's reasonably strong. But it's disorganized. It's not in. It's basically, in various short-term places. Let's just say that. And so there hasn't been, from a policy perspective, and I'm talking not insurance policy, I'm talking whole of system policy, government policy around tax incentives, for example, on insurance investment and life policies, or and so on. There's not the same support in those sort of long-term savings programs as there is in short-term, so the deposit guarantees and short-term savings. So that sort of shift can make a remarkable difference to the availability of those domestic money. It's local currency. It's vested. It's got a vested interest in its own development, in country development, of organising that into policies. Now that's the insurance policies, so that it can be accessed for those very projects that Jackie's talking about, because then the insurance companies have a pool of long-term funds. So there's actually really a very interesting opportunity in this region for insurance companies, I think, apart from the obvious insuring projects.
Hey, I'm going to ask a couple more questions. I'm trying to draw out some themes that have come from various respondents. One seems to be around consolidation. Often in times of stress, you see the kind of mega mergers occur, and also we talked a bit about scale and how attractive scale is to sort of institutions like our own. Do you think that consolidation is perhaps a solution, or is it just you know, putting off the inevitable? I mean, Khalid, you work a lot in the M&A space. So do you think that this is going to be, you know, an interesting period coming up?
It has the potential to be, yes. I think if companies stay under pressure for an extended period, they'll have to look at ways to lower their cost base, and that sometimes leads to consolidation. Also, if markets don't grow as fast, or maybe even shrink, consolidation can be a solution to address that. So it might be driving that. And is that a good thing or a bad thing? It depends how consolidated the market already is, right? So I think governments certainly have a role to play there to make sure that the markets keep functioning. But if say the phoenix that arises from the ashes has a longer future ahead of it, and it's two companies that by themselves would not have survived, I guess everybody would benefit, right? Including the capital providers.
Thank you. Anybody else want to take a question on M&A or consolidation?
I just maybe make a quick remark, Ben. I think the key, I mean, if you look back at the global financial crisis, there were certainly consolidations of banks. Here, I think there is, I would be quite surprised if there is not consolidation in some very hard-hit sectors. I mean, the one that clearly comes to mind, and you touched on right at the beginning of this session, was the oil majors, for example. So, will there be consolidation? I think highly likely. I think the key thing, though, is for all of us, we need to let market forces dictate that. So, what do I mean by that? We're certainly not in the business of bailing out companies. We should let, if companies can withstand this, you know, we can try and help some short-term liquidity support, but we should not be bailing out poorly managed companies. We should let market forces prevail, and there might be some clear drivers for consolidation as a result of this crisis.
Thank you, Jackie.
Thank you.
Hey, I'm going to ask one more question, and it's about sort of more traditional energy projects. A couple of respondents, Ajoy Dasgupta from RJM International, Graham Prentice from OCGS Global. They've both asked about support for perhaps more traditional fossil fuel type projects. I know some banks have made very sort of sweeping policy decisions on financing, say, coal power projects. Khalid mentioned some other things which the bank was looking very carefully at. You know, do we think that the sort of traditional energy sector, which will be here for a long time yet, do you think that that is still, shall we say, fertile ground for banks and financial institutions? Khalid, just turn to you to start with, perhaps.
Well, I hope so. Otherwise, I'll be out of a job. No, look, I mean, energy transition is very much alive, also in banks. But I guess in the end, we're there to support economies and to support growth, right? Growth that everybody will benefit from. And growth needs energy. And I mean, we can all deny it, but the biggest source of energy still is conventional energy sources. And even in the most optimistic outlooks, it will still be dominated by conventional energy. So I would imagine that needs capital, and I would imagine that commercial banks will keep supporting that. Now, will they attach a lot of additional requests? I think that's the question, right? So there's definitely a push for, you know, or there's definitely more environmental awareness within financial institutions, either because it was there innately or because markets are pushing them in that direction. So that will definitely have an impact on how projects will be designed. And an example is, you know, that oil and gas projects are not allowed to flare, right? If they finance themselves through certain banks. I can even imagine carbon capture being a requirement in a near or distant future. So even conventional energy can be made more environmentally friendly and be part of the transition. So I see a push away from it, but I don't think we can afford to fully walk away from it. But there will be more conditions put forward by the financial community to make these projects meet certain standards.
Thank you. Hey, Richard, I got to ask you, you know, just to sort of expand on that question for Indonesia's context. I mean, big employers, you know, big lobby groups in coal and other natural resources. You know, what do you see as the direction in that country for sort of traditional projects?
Well, maybe I should start talking about what UK Export Finance does first. We don't finance coal. Even ultra supercritical technology doesn't really pass muster for us, so we just won't touch any coal-fired power generation at all. But we do see, as Khalid mentioned, we do see gas as part of the energy transition, because, for example, we just financed a developer in Indonesia that is helping PLN to convert diesel generation in remote islands in eastern Indonesia to LNG and piped gas as well. So we see that as being an improvement on what's there at the moment, even though we're still using a fossil fuel. And of course, we do get involved in petrochemical projects as well, but you know, our standards are just the same as ADB, as the banks. We follow equator principles, and inevitably, I think those will be tightened as time goes by, as was mentioned. But the context in Indonesia is obviously very challenging. As you mentioned, there's a strong lobby for coal, for example. But those companies are now obviously suffering, and the collapse in demand from PLN is obviously going to have an impact. But one of the biggest impediments is the government has effectively subsidized coal by fixing a domestic price for coal for power generation, which is set below the domestic market price. So that has to stop, obviously, if we're going to have a genuine level playing field between the various types of energy. On the other hand, they also have to reinstitute the attractive feed-in tariffs for private developers, because those, as I mentioned before, have been absent. The previous minister linked the tariff to the cost of production for PLN in various parts of the country. And of course, that meant that some of the tariffs were quite attractive in more remote areas, but at the same time, you can't do projects at scale or with good economies of scale in remote areas. So that meant, therefore, that there wasn't really much happening. But I'm quite optimistic that they do see the way things are moving, and they will implement a more attractive regime. We're definitely hearing the right noises from the ministers, and we're there to support them to do that. So I'm reasonably optimistic that Indonesia will start to shift in the right direction.
Thank you, Richard. Well, look, fascinating discussion. I'm going to just take a couple of minute or two just to wrap up. Firstly, I want to thank Nikki, Richard, Jackie, and Khalid for contributing today. Really, really appreciate the time, not just today, but all through the weeks preceding to prepare for this event. Thank you so much for contributing. In terms of summary and wrap up, I think what we're hearing is there's going to be a delay to certain projects, to certain work streams. That's inevitable. What I love about talking to the finance industry is sort of inherent prudence of people in the sector. You don't see the kind of on the fly comments and off the cuff responses. There's a real strong prudence to protect the solvency of the economy and to protect the longevity of the institutions within it. And, I think that's a mindset which is very difficult to explain to an innovator or a startup. But, that is the message coming from the finance sector. I would say that kind of prudence and longevity. I think it's very interesting, the discussions we've had on kind of impact on Wall Street versus impact on Main Street. It does feel like the impact could be much more felt keenly felt in the real economy this time compared to, say, the global financial crisis. And that's going to be a key difference, I think. Fourthly, impact on the energy market, inevitable. But, you know, I love Nikki's sort of positivity about this is an opportunity to stop and think about what we can create, what we stand to lose. And, you know, it's not necessarily following a playbook from the developed markets. You know, we can do things differently, and we can you know, skip a generation, if you like, in terms of energy transition. With that, I'm just going to move to one last slide, which Sabine is going to put up, which is on future events for the British Chamber of Commerce has coming up in Singapore. Do support if you can. The Annual Business Awards is scheduled for the 29th of October 2020. I don't know if it's virtual or physical, but the entries for that Business Awards is about to close in around a week's time, I believe. The categories are listed there. Just one last thing to mention, we are going to send you a kind of Q&A assessment of this webinar if you receive it, and if you can spend a couple of minutes just to fill that assessment in, we'd be very grateful. With that, thank you very much for all your time, and have a great day.